And there you go. Okay, can somebody tell me if that's streaming on YouTube or not? Anybody? Is this up on YouTube? Yeah, if you compound it weekly, 1% is significantly more than 52. Yeah, compounded weekly, it is 62%. How do you mitigate the risk? Ryan, I mitigate the risk by never buying something I do not want to hold for a long period of time, because we have a certain set of rules. Rule number one, never buy. YouTube is up. Thanks, Mike. Certain set of rules. Never buy something you don't want to own a long period of time. Julie, did you ever do cash covered puts? Yes, I do, but not on this trading strategy that I'm teaching right here. Okay? It's streaming. Thanks. It's on YouTube. Thanks. Okay, so the question was, how do I mitigate risk? Well, this is how I mitigate risk. Number one, I don't buy anything unless I'm okay with owning it for a long period of time. That's rule number one. Never buy something you're not okay with owning it for a long period of time. Number two, never sell at a loss. Number three, make sure it has 20 years of increased dividends. Number four, weekly options. And number five, make sure all the numbers work. What do I mean by that? If I'm buying something, I want to make sure they have increased dividends, which is my favorite stock. At this moment in time, my favorite stock is probably going to be Macy's, Kohl's, Nordstrom's, and I think Albemarle, AbbVie, and what was the other one? Oh, give me a second. Oh, let's just pull it up. Whoops, wrong one. Profit losses, there we go. All right, there we go. Walgreens. Ooh, there you go. Walgreens, Macy's, Kohl's, General Motors, Comcast. There you go, top five. All righty. What were we looking at? We're looking at Albemarle, right? Nordstrom's, yep. You got it. Okay, so that being said, how do I mitigate the risk? Well, the way I mitigate risk is never buy something I'm not okay with buying. Okay, so if you take the long-term approach is a good quality company, right? You buy a good quality company. How can you go wrong? Okay, so good quality company is number one, right? Never buy it unless you're okay with owning it for a long period of time. All right, so I'm okay. Holy cow. Yeah, camera does make you look 10 pounds fatter. Holy crap. All right, I don't like that at all. Yeah, I like Nordstrom's and Walgreens. Right now, we're going to look at Albemarle. Albemarle right up here. 131.98. These are 132s. Look at that right off the top. Is market manipulation money laundered for the rich? Hell, I really couldn't answer that question for you. So you're looking at 10,000 reports, etc. No, I'm not. Not at all. I only look at the top 150 companies. There's only 150 companies that act. What does my shirt say? All right, hold on, I'll show you. Yep, see that? I'm not listening. I gotta change it back only because it drives me nuts looking at it backwards. All right, let's take a look at Albemarle. All right, so I actually did buy some Albemarle this morning because, here's the reason, because the numbers looked right. Number one, Albemarle, I believe, is a dividend king. Are they a dividend king? Let's take a quick gander at this one. Abbott Labs, no. Abbott Labs, AbbVie, Hormel are dividend kings. So where does Albemarle fit in? That's a good question. ALB, Albemarle. There we go. The dividend aristocrat. All right, well that works. Historical data. Ooh, sorry, I'm yawning. Had a late night last night. We didn't get home until 2 in the morning, and then didn't get to bed until 4. Is iPath a good time to buy? All right, Amir, you got to give me this ticker symbol because I don't know what iPath, the ticker symbol is. All right, so we're going to look at the dividends only. for Albemarle. Nice, nice, nice. From 1994. PATH. All right, Amir, we'll take a look at that. PATH. All right, we'll take a gander at it and see what happens. All right, so look at the dividends for Albemarle, increasing consistently. Okay, increasing, 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 increasing. I love increasing dividends. Okay, how much would I need to make 2,000 in dividends per month? 50,000 bucks. Is that right? Yeah, well, 50,000 bucks. 50,000 bucks is 1% per week, 500 a week. 500 a week times 4 is $2,000. Okay, Bronny, that makes sense? Is it Bronny James or James Bronny? I don't know. All right. So, I like Albemarle. Yes, sir. All righty. See, I said it both ways, but you didn't answer which one. All right. So, let's take a look at Albemarle. All right. A year ago today. Okay, let's take a look at the chart. Okay, now, for those of you guys that are new here, this chart right here can be seen live on YouTube. So, you just come to the 10-minute trader. Where is it? The 10-minute trader right here. Okay, the10minutetrader.com. Slide down a little bit, a couple of videos. This is our live trading. We do live in the mornings where markets open. And right here, right there, live on YouTube. So you click that button, it'll take you right to this screen, which is kind of weird. Okay, let's get back to it. Here we go. All right, so a year ago today, Albemarle opened up at 197.87. Okay, Path has no dividends. All right, sorry, whoever. Thanks, Draft. I want you to check out LTC. LTC Comcast. Didn't Comcast come and go already? CMCSA. Now, 101 Music, just to let you know, we did Comcast a couple of weeks ago. Okay, we collected the dividend or the premium, we got our percentage out, and then we moved on. We got rid of Comcast, I think it was last week or the week before. Okay, now Comcast, don't get me wrong, Comcast is a good company. I take a look at it 4 times a year. First quarter, second quarter, third quarter, fourth quarter. Okay, I bought it, I think it was towards the end of the first quarter. So I probably won't be looking at Comcast again for a while. All right, that being said, let's move it on. Okay. The high of the year for Albemarle was 241.19. How about Office REITs dividends? All right, you got to give me a ticker symbol. When would be a good time to ask you to explain how do your strategy with stocks, no options? Well, Roscoe, I think, didn't you and I have a phone call? It's one of those trading strategies I don't really give up that even, but it's explained very well. I think in book number 2 or book number 3. I'm not quite sure. Yes, we did have a conversation. BND. All right, EK, we'll take a look at BND. BND. But here's a question for you, EK number. Does BND have 20 years of increased dividends? Does BND have 20 years of increased dividends? And does it have weekly options? So you only buy options in a week, they pay dividends. All right, 101 Music, I don't buy options at all. I sell options. You won't like BND. All right, Chris, why won't I like BND? It's a monthly. Yeah, it answers that question. BND is a no. I don't do monthlies. The reason being is monthlies just don't pay. They just don't. It's BDN. Oh, BND, BDN. All right, BDN. BDN. All right. Does it have weekly options or monthly options? No juice in monthlies. Exactly, Jason. All right, so let's do Albemarle. Albemarle was on the list this morning. I bought some Albemarle this morning. A bunch of other people bought Albemarle this morning. Let's take a look. Would you say the market runs on algorithm, which runs on liquidity? No, I wouldn't say that at all. All right, let's go back. A year ago today, we opened up 197.52. The high of the year was 247.44. The bottom of the year was just recently on the 4th of March, and that was 133.12. The last 90 days, which would be January 8th. Where's January 8th? January 8th, right there. January 8th. Okay, 90 days ago today, January 8th, we opened up at 134.20. Okay, we bottomed out on the 4th at 106.69. Jim, unclear? I've been following your lives for 2 weeks now and still don't understand your strategy. Your teaching is unclear. All right, Jim, I'm going to suggest DM me, direct message, send it to my inbox with your phone number. I'll give you a call. It's really not that difficult. You're buying a stock, you're selling somebody the option to buy it from you for basically the exact same amount you paid for it. So if I buy it for $100 and I sell Jim here the option to buy it from me at $100, which is the exact same amount of money I paid for it, he's going to pay what's called a premium. And that premium is going to equal to 1% or more, and that's my 1%. Okay, if the stock goes up, he collects whatever it is. Go from there. ExxonMobil. XOM. Yeah, but Jim, seriously, if you really, you've been here for 2 weeks, so you say, DM me with your number. I'll give you a call and I'll walk you through it. It's really not that difficult. Okay, remember, it was created for a 9-year-old little girl back in 08. Okay, I've been doing this for over 15 years. I get videos of me doing this 15 years ago. All right. The high of the 90-day period was 143.19. And the bottom was a couple of days later after that big drop. See that big drop right here? The high of the 90-day period. Market maker took it down, gapped it down, took away all these profits. See all these profits right here? Gap up, gap up, gap up. Just dropped and dropped and dropped. New 90-day bottom. So let's look at the last 30 days. Now, why do we look at 1 year, 90-day, and 30-day charts? Well, I want to see what the movement is. I want to see what the high is. I want to see what the low is. I want to see where it was. And I want to see where it is. So the high is here, the low is here. 90 days ago it was there, and today it's right over here. Do you ever have losses, Caleb? Yes, I do. I had 3 big losses last year. Okay. This year I haven't lost at all. All right. Last 30 days. Now, why do I want to look at the last 30 days? Well, I want to look at a pattern, see if there is a pattern. Okay. She goes up, pulls back. Up, pull back, up, pull back, up, pull back, up, pull back, up. She even gapped up today. So this is not a time for buying Abelmont. Why? More than likely there's going to be profit taken tomorrow. All right, let's slide down. I want to see what Miss Julie has to say. BlackRock. All right, Julie. What are the Z3 List? Okay, Julie, you got me confused. I have no idea what that means. What are the Z? I have no idea what the Z means. And 3 list. I have no idea what that means either. I'm losing at the moment. Tony does what? Tony, I don't know what you're losing at. Like I say, you guys want to call me? Just, leave me a number. I'll call you. I'll walk you through whatever you're having an issue with. Now, Julie, you've been here for a couple of times. Tony, you've been here for a couple of weeks. Okay, Julie, you're still a little new, so I can give you a little bit of slack. But Mr. Tony does what? You've been here for a while. I've seen some stuff. Okay, are you only looking at dividend stocks? TAPS? Exactly right. Only looking at dividend stock. All right, Jim, thank you for that. So he buys before EX dividend. Yep, that's correct. Okay, QCOM. We'll take a look at QCOM. Oh. I'm over invested in stocks that have been taking a downward ride. All right, Tony, what is that? Hershey, HSY. HSY. Same for me. I got to go back, see those questions. Same for me. Wasn't sure how he made the 1%. All right, James. James 220. There's a couple of Jameses here. All right, James. I'm not quite sure why you're not grasping that. Now, today's Monday. I'm using your strategy, bought Dell, but I'm losing so far. I bought it 134. Well, I don't know why you bought Dell. Well, we'll take a look at Dell. Hold on a second. Right now we're working at Albemarle. Now I actually bought Albemarle this morning, so I'll show you how I got the 1% this morning. All right, Dell, Dell. Now, Mr. Habib, or Habibi, whatever it is, don't mean to insult you or anything, but I don't know how to pronounce that. James, also. James, I'm not noticing this name. I don't recognize it. Now, I'm good with names, so when I see it. Now, Mr. Habibi, whatever. You've been here for a while. You've been following along. We did take a look at Dell. Okay, I'm going to take a look at it again, and I'll give you my opinion why you got it at 134. You know what? Hold on a second. Dell, Dell. All right. Now, I don't know when you got Dell, but apparently Dell didn't hit 134 in the last 30 days. Actually, in the last 60 days. Hit it on Thursday. Okay? Now, don't get me wrong. You've never, ever heard me say, if you bought Dell at 134, the only time Dell has hit 134 in the last 30 days, wait, let's go back up a little bit further. Okay, check this out. For the last year, this is Dell. All right, now you just said you got Dell at 134. The only time Dell has hit 134 was Thursday. Okay, now if you've been listening to me for a while, now I'm not telling you you were right or you were wrong. That's not what I'm saying. Okay, number one, I buy all my stocks on Monday. You bought it on a Thursday. I never buy at a high. Okay, Monday it was 120. Tuesday it was 118. Wednesday it was 128. Thursday it hit 126, 127. Okay, from here up to there. You bought it at a high, which is something I never do. Now, if I was looking at it this week, it would have definitely been a no. Last week it would have been a yes. But last week, hold on a second. Last week was the first, right here. Okay, last week, Monday, okay, it opened up at 114. All right, I would have bought it at the market open at 114. Okay, I would have sold somebody the right to buy it from me at 114, collected the premium, and by Friday, I would have been out of it. I have no idea why you would buy it at 134, because it hasn't seen 134 all this time here. Okay, this is going all the way back to the 8th of March, what do you call it? Yeah, of March. That's the last 30 days. The only time it's hit 134 was on Thursday. I never buy on a Thursday because the option premium's all gone. And if I buy on a Thursday, I sell the next week's out. But I never would have bought it. And look at the chart. You're buying it at a high. Okay, 4 days to the upside, and you thought it was going to continue. I would have bought it on a Monday, where it's marked right there. Okay, 4-1, which is April 1st. That was Monday. Okay, it opened up at 114. The high of the day is 119. And then it closed on Friday at 132. I would have been out. Okay, so I don't know why you did that. Okay, now, James, you mentioned something about how you can't see the 1%. All right, so let's go back to what we were just looking at. And what we were just looking at was Albemarle. A-B-L. No. A-L-B. No, wait a minute. A-L-B. Oh, yeah. A-L-B. Albemarle. All right, we're going to take a look at Albemarle. All right, and I'll show you how I got the 1%. All right, let's go to the trade. All right, first off, okay, let's take a look at the numbers and you can understand it. First off, this is first thing I want to see when I look at a chart. Where's the high? Where's the low? Where was it a year ago? Where is it today? Okay, just by looking at this, take me 2 seconds. High, the low, where was it a year ago? Where is it now? That takes 2 seconds to figure that out. A picture is worth 1,000 words. Okay, doesn't take long. High, low, where was it? Where is it? High, low, where was it? Where is it? Okay, fine. Okay, so a year ago, 199. What was that number again? 194.47. That was a year ago. The high of the year, right there, 247.44. Okay, right there. The low of the year was back here in March 4th. Okay, what was that? 106, somewhere in that area. The last 90 days. So I like the 1 year chart. It's okay. Okay, not perfect, but it's okay. Okay, I want to look at the 90 days. 90 days. Right, here we go. Okay, 90 days ago, right here. A little bit of a downturn. Okay, bounces back up, more of a downturn, bounces back up, a little bit of downturn, bounces way up, pulls back. I like to see the pattern so I have an idea of where it's going to go in the next couple of days.
Kind of like me. Goes down, bounces back up.
Okay, so the last 30 days. Oh, wait. So we got our 30-day, our 90-day high at 143.19. Our 90-day bottom at 102.69. Okay, so let's look at the last 30 days. Why am I want to look at the last 30 days? Well, I want to see the pattern. Okay, up, down, up, down, up, down, up, down, up, down, up. Okay, now, we jumped at it this morning. Okay, I jumped in this morning at 131.05. Okay, now this morning, she opened up at 125.19, and I jumped in at 131. I wonder how the hell that happened. Anyway, besides the point. Okay, so by the time I recognized and saw it, I jumped in. I got filled at 131. All right, fine. So I sold the 131s. Okay, now let's go take a look at the seasonality, see what this thing normally does this time of year. Okay, normally, Albemarle, right here. For those of you who don't know, let me go back a bit. For those of you who don't know, this is a seasonality chart. What does that mean? Well, the blue line represents the movement for this year. The red line represents the moving for the last 10 years on average. So it takes 2014, 2015, 2016, 2017, so on and so forth for the last 10 years, and it gives us the average of the last 10 years movements. Okay, fine. Okay, so what I want to do is I want to take a look. Right, that blue dot right there is today. I want to take a look at this area right here, the beginning of April to the mid-April. That's the area I want to look at right there. So I put my mouse there, click, drag till it lights up. Okay, click, drag again, right there. As soon as it lights up, that's 2 weeks, right there. Okay, from there to there. Okay, that is a very slight upward angle. Okay, see where my line is right there? Very slight to the upside. I love that. Great. So I jumped in this morning. Oops, slide over. Now this morning, like I said, opened up at 131. Okay, 131. I sold the, let me get this out of here. Okay, I bought it at 131, but I sold the 129s. Now I sold the 129s and collected $1.71. Okay, that's more than 1%. So you want to know how I got the 1%? Well, at this moment in time, okay, first thing tomorrow morning, it's going to open up at 132. Is that price right there? 132. So if I buy it at 132, come here to the strike price, 132, I can get $2.78. Okay, I know it doesn't sound like a lot of money, but let's do a little bit of math. Okay, we take the profit, which is clearly right here. See the 132s? It's going for $2.78 a share. $2.78 a share. All right, so you understand how it works. Buy the stock at $131.98. That's the purchase price, $131.98. Okay, and I sell somebody the right, not the obligation, but the right to buy it from me for the exact same price I just paid for it. So if it's at $131.98 and I sell off the 192, sorry, see the strike price? 127, 128, 129, 130, 131, all the way up to 136. It goes all the way up, okay? Right now I'm just looking at 10 of them. Okay, there's a lot more. But I want to do the one where I paid for it. I paid well, if I buy it tomorrow morning, $131.98. The 132s are going for $278. So what does that come to? Okay, I want to divide it by the purchase price, 131.98, and that comes to a grand total of 2.1%. Okay, it's not 1%, it's 2.1%. So you want to know how do I get 1% per week? Well, I just showed you Able Model, ABL. Okay, ABL, Able Model. Good companies, the Dividend King. I think someone said it was a dividend aristocrat. I don't know. But anyway, they've increased their dividends consistently for the last 20 years. Okay, is it a good company? That's the question you need to ask yourself. Number one, is it a company I want to buy and hold for a long period of time? Okay, I have no problem buying it and holding it. But if I buy it and I can sell somebody else the opportunity to buy it from me, or the privilege to buy it from me. Okay, I got there first. I buy it at 131.98. I sell somebody the rights to buy it from me at 132. They only have to dish out, was it $2.87 to take advantage of it, any kind of movement. That's what options about. Leverage. It's like 100 to 1 leverage. Okay, so they're leveraging it. They think it's going to go higher. Do I care? No, I really honestly don't care. My only concern is they have their dividend coming up in a couple of weeks. Okay, they have their dividend coming up. I have an opportunity to buy it. So I buy it first thing in the morning. I sell somebody a covered call. It means I buy the stock first. I sell the call option. What's called a covered call or a call strike or protect. I don't. I've always known it's called a covered call at 132, which is 2 cents more than what I paid for it. Am I making 2 cents? Well, maybe, but that's not what I'm looking for. I'm looking for the option premium. Okay, the option premium is 278. Okay, that's my profit first thing in the morning. So if I buy it first thing in the morning, sell somebody the option to buy it from me, I collect 278. 278 is 2.1% of the purchase price. So, Jim, you wanted to know how I did it. That's how I did it. Mr. Habibi, I don't understand why you bought that stock at 134. Really don't. And you bought it on a Thursday. I never buy on a Thursday. Especially don't buy it when it's, 4 days to the upside. Okay, let's go. What questions did I miss? VDY. Okay, whoa, I missed a bunch of questions. I did. I sold a covered call yielding 2.7. Okay, that's cool. Unqualified misinformation. Cool beans. How does someone buy or sell after close? You don't. Bro is sus. Okay, cool. Draft, Tony, all right, whatever. All right, LA Soundwave. James, if you are out of the money, how do you get the stocks back if you needed to be all cash? LA Soundwave, as soon as you buy a stock and you sell the option for it, it's a waiting game. Wait till the option expires, number one, or number two, you buy that option back. That's all there is to it. But always keep yourself focused on what your goal is. Jay King, do you wait for VIX to hit a certain level? Don't even look at the VIX. Okay, you guys remember, this trading strategy was created for a 9-year-old little girl. All right, just sell your positions if you want to be back into cash. Okay, Mr. V, what's your win percentage ratio with this strategy? Well, so far this year, it's been 100%. All right, last year I lost 3 times and I missed my target 8 times. Okay, so 8 times last year I didn't collect 1%. 3 times this year I did not collect 1%. I collected 0.9 one week, 0.95 another week, and 0.85 another week. Fascinating football videos. How are you doing? All right. If the stock falls, you lose. Not necessarily so. All right, Caleb. Kill him nicely. Oh, kill him nicely. All right, kill him nicely. I'm going to refer you back to rule number 1. Okay, if you're afraid of the stock falling, don't buy it. Okay, you're here for trading in the stock market for profits. Okay, stocks only go 2 directions. They go up or they go down. Okay, that's all they do. They go up or they go down. They don't come to your house and make you breakfast. They don't tuck you in at night. They don't read you a bedtime story. They go up, they go down. If you're afraid of a stock going down, you shouldn't be playing this game. And that's all it is a game. just a place to put your money and hopefully get profits. That's all it is. The key to it is never buy something you do not want to hold. Never sell it at a loss. Make sure you have a good strategy. Now, this is just a strategy I created for my 9-year-old daughter back in 2008. And as an old saying goes, if it ain't broke, don't fix it. Okay, it works very good for me, and that's why I'm sharing it. Okay, it's a simple strategy. What's the name of the stock? ABLM. I have no idea. Okay, the stock we're looking at right now is ALB, which is Albemarle. Okay, Draft, SAB. He posts his trades on the site. He never sells at a loss, so it's dependent on what you mean. Hey, thank you for that, Draft. Got to make you one of my moderators. That way I can eliminate some of these questions. Kill him nicely. How nicely? Keep selling calls, collecting dividends until it goes back up. Jason, that's exactly right. The longest I've ever held on to anything was Kimberly-Clark. I held on to it for 9 months. Okay, I collected premiums every single week, and I collected dividends 3 times. So I collected 3 dividends, and I collected somewhere around 20 premiums. Every single week I collected a premium. Okay, now let's continue with the questions. Draft again. Kill them nicely. That's why you only buy stocks that have 20 years increased dividends. Exactly. Stocks that doesn't mind holding for a long time. Exactly right. If I'm going to hold a stock, okay, if I'm going to buy something, number one, I never buy something unless I plan on holding it for a long period of time. Okay, do I plan on holding it? Yeah, well, that's the plan. Do I want to? No. I want to collect that 1%, say thank you very much, see you again in 90 days. Okay, every 90 days. Okay, Albemarle, right here, Albemarle, this stock will pay its dividend, and then 90 days later, it will pay another one. 90 days later, it will pay another one. Exactly when does it pay? Let's find out. It paid on the 16th of March. Yeah. So we're not going to look at this again for another 10 weeks. Why did we get this week? Because the numbers just looked good. They did. Looked okay. Is it a solid strategy so long as you select the right stocks and buy them at the right time? Well, Jose, that's exactly what we're doing. Okay, we buy them before the EX date. Okay, we sell somebody the right to buy it from us for the exact same we paid for it, and then we count on the people that are trying to buy it for the premium. Okay, I'm missing some questions, sorry. How much of your value portfolio do you need to retire dividends? Well, how do I start? Well, Vic, first off, DM me with your number. I'll give you a call and we can chat. Okay, either that, or you can go right to the10minutetrader.com and go to right there, live trading. Okay, that's my live trading. I actually go on every morning just before the market opens, stay on for about an hour. Hey, Mike, I stay on for about an hour answering all the questions. Okay, you want to jump on, ask me questions, there you go. You pay, $100 a month, and you get to ask me questions for as long as you're done, until you're done asking questions. It's really that simple. Okay, you click on that, and that will bring you over to the Patreon, which is Dividend Stock Talk. You can even go to Google, look up Dividend Stock Talk, and it will bring you to my websites. So I've been online for over 20 years. Okay, I've had the same email address since 1994. Anyway, let's keep on going. How much value portfolio do I need to retire in dividends? Zet, you're really going to need to come up with a better question, because that one, I have no idea how to answer that one, because I have no idea what your monthly bills are. I have no idea what you have available, what kind of resources you have available, what kind of obligations you have, what your risk factor is. A lot of unanswered questions there. Okay, but I live comfortably off of 1%. Let's keep on going. James D, Julie C, your cost basis effect goes down every premium and dividend you collect. That is correct. Is that your goal? Is 25. All right, Mike Chunko, is that main goal is 20%? I don't know if that's 20% per year. 20%, good investment. Yeah. Okay, Jason, true. Thank you. What about Caterpillar? CAT. All right. Well, I'll put CAT down the list. CAT. All right. Caterpillar's on the list. See, I got a couple more questions to go through before I jump and take a look at more. Right? How often are you getting assigned? Is it a high percentage? All right, Jay King. I would. Oh my goodness, where'd that come from? I would really like to get assigned 100% of the time. That's my focus. I want to buy, collect the premium, get out, jump into it, something else next week. That's it. Buy, collect the premium, get out on Friday, jump into something else on Monday. Rotate it over and over. Because I got 150 stocks to look at. I don't run out of stocks. I don't. I have plenty to buy. All right. So caught up with the questions. So let's take a look at another stock. And the next one on the list, LTC. LTC. LTC Property. Maria. That's a no. Real quick. You like that one? No. You want it's a no? It's a monthly options. Monthly options are crappy. They really are. They're crappy. The premium's just not enough. You get 1, maybe 2%, and you have to divide that up into 4 weeks. Yeah, no. ALB we did. Comcast. Now we did Comcast. All right. Now remember, when a stock pays its dividend, right? After we collect CMCSA, okay, Comcast paid its dividend last week. Okay, last week, which is the first week of the quarter, week number 1. We're in week number 2. We're not going to see Comcast again for another 12 weeks. 12 more weeks and we'll see Comcast again. Okay, so Comcast is going to be a no. But I'll take a look at the numbers anyway so you get an idea how it works. Okay, Comcast, CMCSA. Let's change this to that. Interesting. Okay, so 48, 41. Okay, so basically, Comcast is going to be a no for next week. Uh-oh. Yes, Chuck, guys are answering all the questions. I don't even need to be here anymore. You guys are all answering all my questions with me. I tell you, Julie C. Yeah, got lucky a little. All right, Mike, you didn't get lucky. You were here from the beginning, and you were the very first person to sign up. Okay, he asked all the questions. He did all the right trades, so he's making money. Why use only dividend stocks? They move slowly. Kill them nicely. You're absolutely right. They move slowly. Okay. I am 60. I'm retired. I don't want to go back to work. I want a safe, secure, predictable income. I'm not looking for capital growth. I'm not looking for the stock to jump way up. I don't want to buy it at $1 and have it go to 10, 15. No, I don't. I want it to go sideways slowly because I want a safe 1% per week. Okay, a safe, predictable, consistent 1% per week. Okay, it's boring, it's slow, it's not fancy. Okay, it's not fancy at all. It's very unsexy and very unattractive, but 1% per week does come to 50% per year. I'm on target to get 0.5% this week due to getting stuck in some stocks. Well, Al, whip them out. Let's take a look at them. So Comcast is going to be no this week. Why? Well, here you go. 40.89. That's what I can buy it for tomorrow morning. So the closest one to it is going to be the 41. The 41 is going for 32 cents. That's not 1%. Okay? And the dividend's not for another 12 weeks. But I'm okay with it. I did more than 1% the early week. Yes, we did. But let's take a look at them anyway, because people want to know what happens when a stock goes down and why you only get 0.5% rather than 1. Been trading with James since he went live January 2020. Yeah. How can I say it? All right, Ebrosar, up here on the bio right there, it says my little picture right there, and it says dividend income. Yeah, click on that, and there's a little link there that will bring you to the 10-minute trader. Okay, right here, the 10-minute trader. Okay, investing in dividend stocks up to 50% annual return, simple, safe, consistent, and predictable. Blah blah blah. This is what you want right there. Live trading. Click on that. It goes to Patreon, tells you, hey, I want to jump in the morning trades. There you go. Here's all my social media: YouTube, Twitter, Facebook, Instagram, podcast. Yes, I've been doing podcasts for over 4 years. Every morning I do a podcast. Okay, I do all my trades every single morning. Go to any podcast place, listen to the Dividend Stock Talk, and it'll take you right to here, okay? Right to the podcast. And I'll give you all the podcasts I have done over the last 4 years. There's over 800 of them. Lots of listening material. What happened to Macy's? Carrying 3M and WBO. Now what? Nice week again. Can this keep going? Yeah. Moot. Okay. I don't know what moot means. I'm up about approximately 20% way to go in the account I started with now, trading in an IRA and Roth. Cool being. Jason, WBA. I bought a little UPS this week. Oh, all right. I will take a look at UPS. UPS. Oh, was that another one? WBA. WBA. Walgreens. I actually have some Walgreens. I think I bought some Walgreens this morning. I'm not 100% sure, but let's take a gander. All right. Oh, yeah. So Comcast for this week? No. They already paid their dividend last week, so that's a no. Macy's got me 2% this week. Me too, Lone Wolf. Silly question, but what do I do with the stocks that are out of the money, and how do I track my gains? Confused. All right, LA Soundwave, ask us that in the morning. Okay, that way everybody in the morning trading, they find out. Just for you guys knowing, LA Soundwave is one of the morning traders. Around how much should I put in to live off 1% comfortably? That's going to be totally up to you. Okay, 98% of all my money is invested at all times. What do you think about Meta? No. Coney got me 70% this week. Okay, that's good. I have no idea who Coney is. Coney pays monthly. That's a big fat no. Sorry, dude. I use Excel to track what I'm doing. Yeah. Oh, Julie C. It is every morning or just Monday live trade? No. Julie, it's not every morning. Monday, Tuesday, Wednesday, Thursday for morning, and Friday afternoon. Friday afternoon because we want to be on just before the market closes. Carver, RBA. RBA. Never heard of them. All right. Try Super Gain, 70%. Yeah, no. Do you discuss fundamentals of companies? Mr. Comedy, that's an interesting question. Now, I check out my stocks once a year. Okay, I look at simples. Spend $100 to make 30-40% or more. Same as a dinner out. Yep. It all depends on how you value your time, really. Okay, $100 a month for whatever 1% is. Okay, so if you have 100,000, 1% is $1,000 a week. That's 4,000 bucks a month. Okay, at 50 grand, that's 500 bucks a month. That's 500 bucks a week, which is $2,000 a month. Romeo, hey, I'm happy that you're here today. The world is a better place with you. Oh, thanks, Mr. Romeo. I'm gonna take that as a compliment. Coca-Cola. All right, Clayton Hawkins. Coca-Cola is a great company, really. I mean, they ain't going anywhere. All right, they've been in business for over 100 years. Dividend King, increasing their dividends for more than 50 years consecutively. That's 5 decades. But the premiums are horrible, less than 0.5%. But if you're okay with 25, 26% per year, hey, Coca-Cola's a great one to get into. All right. Next one on the list is BDN. Brandywine Realty. That's a no. Monthly. Monthlies just don't pay. XOM. ExxonMobil. Here we go. 120. 21. That's going to be a no. Maxar. Never heard of them. Awesome. Thank you. Way to go, Clayton. Maxar. MAXAR. I never heard of them, but I'll take a look at them. Okay, ExxonMobil is going to be a no. 2 reasons. Okay, you ready for the 2 reasons? Reason number 1. 120.87. That means I can sell the 121s. The 121s are going for 90 cents. Not even 1%. Second reason, look where it is. It's at an all-time high. Okay? No. I do not buy it high. It's like standing on a ladder waiting for someone to bring you a tall ladder. What platform do I use to trade? That's Thinkorswim by Charles Schwab. Charles Schwab owns Thinkorswim. CVX, Chevron. Hey, Carl, nice to see you back again. CVX. Carl, you've been coming back and forth, but I don't know if you jumped in and joined or not, Mr. Comedy. Tell me how to get an account to short stocks. Do I have that good credit rating? Nope. Mr. Comedy, I don't short stocks. Okay, I like staying things positive. WAG. Thanks for sharing. You're welcome. WAG. On that one, killed him nicely. The reason why I'm sharing is you at some point in life, you'll get to a point. You'll get to a point where you feel compelled to share your knowledge. All right? I got 3 kids. All 3 of them not interested in money at all. Not. Okay, one son's a bartender, the other one's a cook, and my daughter washes dogs. Okay, she's the original 10-minute trader. She gave up this to wash dogs. Don't ask me why. I honestly don't know. Great info, enjoy watching and learning. Crime 407, cool. Why don't you short stocks? Here's the thing, Mr. Comedy. There's an old saying. I'm old school. I'm a Gen X. Okay, I'm one of those firm believers. If it ain't broke, don't fix it. Okay, now I get a safe, secure, predictable, consistent 1% a week. That comes to over 50% per year. I'm perfectly happy with that. There's an old saying. There's a bunch of old sayings, but there's a few you'll hear me say over and over again. Okay, in the stock market, there are bear, bulls, and pigs. Okay, bears make money, bulls make money, pigs get slaughtered. I'm perfectly safe, comfortable with 1% per week. You hear that, Carl? Okay, Carl, you got all that gray hair. You know what I'm talking about. Okay? The market doesn't always go up. You're absolutely right. It does not always go up. Stocks go 2 ways, all right? Right here, look. It goes up, it goes down. 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 That's all it does. You just got to be at the right place at the right time. Okay, that's why I bet, but I get 70% per month more risk. Okay, super gains, that's cool for you. Okay, but I can almost guarantee you it's not predictable and it's not consistent. Up, down, and sideways. No, nope. Do you see any of these things going sideways? Nope, they go up and they go down. They go up and they go down. The market might not always go, but it fluctuates. Yeah, that's true. Yeah, it does go up. You give me one day where it didn't go up. All right, one day. Oh, look at this. Oh, wow, look. Every single day it went up. Okay, look. It was here, now it's up here. Okay, here, now it's up there. Here, now it's up there. It goes up, it goes down. Okay? Can she open up here? Oh, she went up. Okay, she opened up here. Oh, it went up. She opened up here. Oh, it went up. She opened up here. Oh, it went up. It goes up, it goes down every single day. Loaded on Tesla long-term and Roth IRA. $1 million trader Dan. Cool beans. Your chart is also going sideways. Mr. Comedy, no, it don't. Okay? The only line that goes sideways is the crosshair line. Okay? Okay? This is the only line that goes sideways. Okay? Here. Okay? A green day. Opened here. Closed here. But look, if it opened here, how did it get there? It went up. Okay? Red day. Okay, red day. It opened here and it closed here. But look, if it opened here, it went up. Okay? It also opened here and it went down. It went up and it went down. It did not go sideways. They don't go sideways. They go up, they go down. That's it. Sideways between, yes, there's no such thing as a flat candle. Okay, you're thinking of a doji. A doji, whereas it opens and closes at the exact same number. But if it opens up at one price on a doji, see if I can find a doji. Oh, I think I just saw one. Right there. Okay, they call that a doji. Okay, it opens up. Let's bring this over here. AVG, we'll take a look at that one. Squirrel, can you get back to the trade? Thanks, Draft. What book can I read to be sharp on this? Hey, Jordan, nice of you to show up. All right, I'm done with that argument. Okay, I don't see a single one going sideways. Okay, opened up here, goes up. Opened up here, went up. Opened up here, went up. Open up here, went up. Open up here, went down, went up. That's all it does. It goes up, it goes down. What's up, Gino? ODTE, no. SW, yep, Zen, no. Draft, okay. Ask you, is this specific strategy? No. Books. Yes, there is a book. All right, for those who are interested in the books, go back here to the 10-minute trader, and there's a, okay, see all these little dots? You click on the one that says Books by James. And it goes to Amazon. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is 13 of them. I'm working on book number 14. Will a stock always be called away if the strike is met at expiration? No. When you buy a contract, how far out in the money are you expecting usually? All right, Dirtbag Online. I don't buy, I sell. Okay. Are you holding these dividend stocks long term? No. 80% of day traders lose money. You're absolutely correct. Is there a way to buy all the books in bulk? Probably. I don't know. Patterns over supply and demand zone. Okay, interesting. Randall Ray, how are you doing? Hazim, that's an interesting question. Patterns over supply and demand zone? I'm not quite sure what you mean by that, but you're making it complicated. What stocks did you get today? Now, G. Niles, you're in the morning group. So if you're in the morning group, you get a copy of the morning trades, and you also get, I think you get a copy of the recording. Thoughts on Forex? Yeah, no. I don't do Forex. I did it years ago. You have to sit in front of it and just look at it all day long. Yeah, no thanks. So you only sell calls? Absolutely. Buy the stock, sell the call. Unboxing, shared alive. Thank you for that unboxing. TKN, new guy. TKN, never heard of him. All right, that's going to be enough for the questions for a while. Let's go back and take a look at another one. Did you buy Walgreens today? Yes, I did. So how long do you hold when you sell them? All right. Try Super Gains. This morning, all right, I bought, I believe, what did I buy? I bought some Walgreens. I bought some Albemarle. I bought some AbbVie. Do you sell premiums at a good till cancel? Or do you sell premiums at good to cancel or state in expiry? Well, mind, I sell a call option, a weekly call option. Okay, so whoever buys it from me, okay, now you got to get the terminology correct, because if you get the terminology wrong, you can lose. Okay, you have to know what buying and selling and buying means. It sounds simple enough. Okay, it really does. And if you think of just two things, and two things only, okay, buy a stock, not sell, not short, not long, no, buy a stock, sell a call option. But when you buy 100 shares first, though, right? Exactly, you buy 100 shares, that equals one contract. 200 shares, 2 contracts. 1,000 shares, 10 contracts. Do you sell premiums at good? Yeah. Sometimes I sell them at the market price because I want to be filled quickly, and sometimes I sell them at limit orders, depending on the day. That's why, people pay $100 a month to actually watch as I trade and ask questions. If you have a question and you have a stock that's up consideration, ExxonMobil right now it's at 120. Okay, 120.87. The 121 is going for 91 cents. It's not worth it. It's not 1%. Let's look at the next one. HSY, Hershey's. HSY. 198. Okay, that's going to be a no. All right, kill them nicely. What I usually do, okay? Now, I have 5 different accounts. Each one is different. Actually, 2 of them very similar. So buying 300 shares and selling 1 weekly call AMC, risk 33% of your stock is a good strategy. No. All right, so if I buy 300 shares, I would sell 3 contracts, okay? And call in AMC. I don't know what an AMC is. Weekly call of AMC. Okay. Risk 30% of your stock. A good strategy. No, not really. Because you're getting confused some of the terminology. Okay, so hypothetically speaking, let me find a decent stock we can look at better. Okay, so Hershey's is a no because the numbers just don't work. All right. Dell. Let's take a quick look at Dell. D-E-L-L. 126, 127. All right, here we go. Great. 127. Even though I don't like the chart, I'll show you the numbers. Okay. See, I don't like the chart. Okay. I want to see four things when I look at the chart, and you should be able to see it within just like that. You look at the chart. The high, the low. Where was it a year ago? Where is it now? Right now, it's at a high of the year, so that's automatically a no. So even though the numbers work, because look, 126.84. So I'll be looking at the 127s. The 127s are going for almost $3. That's a hell yes. That's 2%. But the chart don't work. Okay, so the chart, it's got to work first, and then the numbers got to work. It's really not that difficult to find one. I'm going to find you one, and I'll explain what I'm talking about. You know what? Let's look at WBA, because WBA usually always works. WBA. Whoops. WBA. 19. Ooh. Holy cow. 19's out working this week. Yeah. Oh, wait a second. Okay, yeah. The 19s do work. All right. Okay, so the numbers work. The chart works also. So let's take a look at the chart. All right, and then you'll see what I'm talking about. All right, Dirtbag Online, this one's for you. You ready? Okay, Walgreens started out a year ago at 36.04, topped off the year at 36.45, and then made its descent down to a bottom 1969. That was the end of November. Okay, beginning of the year, we topped out at 27.05. The last 90 days was the 8th of January. Now, that was the high of the 90-day period, 25.87. She drops down, bounces back up, drops down again, bounces up again, drops down. Let's look at the last 30 days right there. 30 days ago today, we opened up at 21.01. Okay, went up a little bit, pulled back, up a little bit, pulled back, up a little bit, big pullback, drop down. We got a 30-day top on the 28th. Now, 30-day top was 22.05. Now, 3 days later, you're at the 30-day bottom. Okay, so here's the thing. As the stock goes up, that's a big up right there. Do you see the size of it? It goes from, what was it, 2060 all the way up to 2210, some of that area. That, compared to all the other days, that is a big up. Okay, great. Profit, you don't take it. The market maker takes it away from you. Okay, this right here, market maker pushing it down. Now you got 30-day high on the 28th. 30-day high was on the 28th. See it? All right. The 30-day low, 3 days later on April 3rd. 2 days to the upside. Thursday, Friday. What does that tell you? Thursday, Friday's update after this big, huge drop. Okay, 30-day high here. 30-day low here. 2 days to the upside. That is a buy signal to jump in. So that's basically what I did. I jumped in and bought WBA, which is Walgreens. Okay, so Dirtbag, you ready for this? Okay, so this morning, Walgreens opened up at 19.20. All right, so if I bought it this morning at 19.20, where am I? WBA, not in that account. Not in that account. Where the heck did it go? No. Oh, I don't have WBA today. Well, apparently not. All right, anyway. WBA, let's take a look at the numbers. At this moment in time, the last trade was 1916. The bid, 1911. The ask, 1919. So if I want to buy it tomorrow morning, I'm paying 1919. Okay? Now, if I buy it 1919, let's get my calculator out. Clear that. $19.19. Multiply 300 shares. That gives me a grand total of $5,057. Okay, see the calculator, $5,057. All right, so let's clear that number. Now, if I buy it at 1919, what option can I sell? Well, let's take a look at the 19, because I'm buying it at 1919. And if I sell the 19s, I'm collecting 38 cents. However, I'm buying it at 1919 and selling it at 19. It means I'm losing 19 cents. Okay, well, let's take 19 cents off the profit. Here's the profit right here, 38 cents. So what's 19 cents minus 38? 19 cents. Isn't that weird? Okay, so my profit's only 19 cents. Okay, 0.19. Now, I'm buying the stock for 19.19. However, I took that 19 cents off the table because I'm losing it right there at the premium I'm collecting. All right? So I'm going to divide it by the purchase price, 19. Not 19.19 because I've already subtracted that 19 cents off of there. Okay, so that gives me a total of 1% for the week. Correct? Now, Dirtbag, you ready for this? It sounds funny because that's his name. All right, so don't make fun of me. That's his name over here. Now, that $5,700 I'm investing, okay, $57.57. I'm collecting 19 cents a share on 300 shares. Okay, 0.19 multiply 300 shares equals $57. Correct? Now, I made a profit of $57. What was my investment? $5,757. So I'm going to divide that by 5,757. Okay? That gives me a grand total of 0.99. All right, that's close to 1%. Let's not split hairs. All right? There's your 1%. Now you have to ask yourself a question. If I buy it at 1919, I sell somebody the right, not the obligation, to buy it from me at 19. If the stock stays at 19 or higher come Friday afternoon at 4 o'clock, okay, Monday, the following Monday, I'll be back into cash if it's above 19. If it's below 19, I will keep that premium and I will continue to own those 300 shares coming into Monday. And then I get to do it all over again. Okay, so if I do it all over again, what's the 19 worth next week? Well, next week's 19 is worth 54 cents a share at this moment. As long as it's 1% or more and you like the company. So here's the question. Walgreens has been in business for over 100 years. They've increased their dividends consistently. They're in almost every major city in the United States. Do you really think Walgreens is a bad investment? So the question, number one, never buy something you're not willing to hold on to for a long period of time. I'm perfectly okay holding on to Walgreens. Okay? The 19 is paying 19 cents, which is 1%. But here's an interesting thing. If the stock goes up, because right now it's at 19.16. Okay? You got a 30-day bottom here, 2 days to the upside. Well, you're 3 days to the upside now. 1, 2, 3. Even though today was a down day, it's still higher than it was yesterday. All right? It was higher than it was on Friday, higher than Thursday, and higher than Wednesday. Okay, so Wednesday was down here, up, up, and up. 3 days to the upside so far. Okay, now, if the stock stays exactly where it is at 19.19, Friday, it'd still be over 19, and you'd be back into cash on Monday. Okay, so if the stock goes up, you make your money. If it stays exactly where it is, you'll still make your money. The stock can even come down a little bit, because right now it's at 19.19. If it drops down to 19, but stays at 19 or above, come Friday afternoon, you'll be back into cash on Monday. Okay, so that's how you do it. I missed a couple of questions, so let's go back. Okay, why not 1950, the strike price of Walgreens example? Okay, Julie, the 1950 is only going for 15 cents. That's not 1%. That's one question. The second part of that question, it's at 1919 now. In order to be back into cash, which is what you want to do because you want to be able to go do another stock, okay, the stock has to move up. At 19, the stock doesn't have to move at all. It can stay exactly where it is. But at the 1950, it does have to move up. Okay, I don't have to do anything on, wait a minute, I don't have to do anything on Thinkorswim at the end of the week. Can you explain what others do? Well, Randall Ray. I do know that on Robinhood, you can't let the options expire. Thinkorswim, you can let them expire. Okay, but on Robinhood, you have to buy them back. What's my opinion of MO? Altria. I love Altria. Okay, I don't think it's up for consideration this week though. But I'll take a look at the numbers and show it to you. Joy, do you trade stock options? Yes, I do. Cash secured puts. Old dog? No. 186, James, were you live last night or did I miss you? No, I wasn't live last night. I spent the night in the hospital with the wife. What if some news came out and the stock drops 15 bucks? Would you continue selling the 19 call? Awesome question, Joe. I'm going to refer you back to rule number 1 and rule number 2. Rule number 1, never buy something you don't want to hold long term. If it drops, it drops. Okay? Rule number 2, never sell at a loss. And would I sell it? Would I continue selling options if it dropped to 15? Yes, but I'd be selling the 16. I'd be selling the 17s or the 18s. Okay? I wouldn't be selling at the money. I'd go far enough out where I'm collecting something. Okay, something is better than nothing, and then wait for it to get back. Okay, I'll give you my cow. I give my cow analogy. I like this analogy. Okay, let's say hypothetically I buy a cow, and a cow gives me a gallon of milk every week. And all of a sudden, he only gives me half a gallon of milk. Do I get rid of him because he only gave me half a gallon? No. What if he only gave me a quart? What if he only gave me a cup? Do I get rid of it? No, because I wouldn't have bought the cow in the first place unless I wanted to own it. That's my analogy, metaphor, if you like. Okay, never buy something you do not want to own a long period of time. Walgreens has nice dividends. They consistently increase their dividends. And they have very nice options, very nice premiums. My thoughts on KULR. Do you still like AbbVie? Yes, I do. Calvin Hill's falling draft. 186. Same. Did you hear her speak during the live? She sounded cheery. Oh, yeah, she did. All right. Walgreens sold their Euro division stock ownership to gain liquidity dividends. Okay. Are you ready for JPM to make all-time highs? Well, we'll put JPM on the list. JPM. But just to let you know, KOS, I don't buy at all-time high stocks. Really don't. All right, so that was Walgreens. We looked at Dell. Dell was a no. Someone mentioned Caterpillar. Now, I like Caterpillar. Every once in a while, I'll buy Caterpillar. But let's take a look at Caterpillar. Caterpillar is going to be a no. 2 reasons. 3 reasons. 3 reasons why Caterpillar is a no before I even look at anything. Number 1, look at the chart. Way up there. Okay? There's going to be profit taking sooner or later. I want nothing to do with it, personally. Don't get me wrong. I love Caterpillar. I really do. Okay? Reason number 2, it's over 300 bucks. I don't do stocks over 300 bucks. I don't have as much money as you think I have. I don't. $300 stocks out of my price range. Sorry. Reason number 3. Stock price 373, the 372, the 375s, which is the next one out, 340, not 1%. Thoughts on GME? How do you buy back at the end of the week if it doesn't strike the option? Oh, yeah. You know what? If you're really worried about it, don't worry about it because they'll do it for you. Funny thing is that, like on Robinhood, if you're getting to the point where the stock is in the money, you just let it go and then they buy it back from you. But if it's not in the money, you have to buy it back. And if you don't, they'll do it for you. You don't have to do anything. They'll do it for you. They just won't give you favorable pricing. Thoughts on GME? What about CVS? CVS, GME. We'll take a look at both of them. Right now, we're on UPS. Well, I missed some questions. What's your opinion on ELF? Well, ELF, those guys are pretty cute. They deliver the presents with Santa Claus, right? I have no idea what ELF is. If I've never heard of it, then it's probably a no. Blade, when your dividend is paid, does it credit back to the account here? No, it goes to your own account. All right. GME, no dividends. Thanks, Randall. Tesla, no. Altria, which is MO, I gotta take a look at it. What do you think about Sound? Sound is a no. You guys have me look at it all the time, and every single time I look at it, it's a no. Okay, we're looking at UPS, which is a good company, and it's on my list. I don't know if it's up for the list for this week. UPS, the 150. Ooh, 28. Nah. If I take 28 off of that, that's going to be a no. Apple, Ribbon's a no. Okay. Now, Apple is usually a no for this strategy. The reason being Apple's a no for this strategy, they don't pay dividends. But I do trade Apple, and the only reason I trade Apple is because it's on Warren Buffett's list. Ally is the same thing. ALLY. It's on Warren Buffett's list. Ribbon is a no. They don't pay dividends for 20 years and consistently increase them. Does Thinkorswim come with a debit card? Awesome question. Yes, it does. So does Robinhood. Oh, wait a minute. Thinkorswim used to give you a debit card and a checking account. I don't know if they do now because it was bought out by Charles Schwab. Okay, Charles Schwab bought it up. I don't know if they're still doing it. All right, UPS. Exxon. We already looked at Exxon. Okay, we looked at Exxon about 15, 20 minutes ago. That was a no. Okay, UPS, 150.28. So if you look at the 150s, it's going for 162. But you're losing 28 cents off the top. You take 28 cents off of this, then you're looking at 120. Wait a minute. 40, 30, 34, 134. That's not 1%. Yes, they do. It opened up Thinkorswim with Charles Schwab. They offered me during. Okay, there you go. Do you think market crash is likely soon? Of course it is. General Electric. Ooh, we'll take a look at General Electric. That's another company over 100 years old. All right, do I think a market crash is likely soon? Well, there's a market crash every decade. Okay, Jack Fitness Clips. Okay, a market crash every decade for the last 100 years. You take a look at every decade. There's a correction, crash, recession, whatever you want to call it, every decade. Okay, we had one last decade. We actually had one this decade already. We did. So we might not have another one. I don't know. Sticks. Yes, they do. I opened up a Thinkorswim with Schwab. They offered it. Okay, cool. Mara, how are you? You open an account through Charles Schwab and they give you a debit card. It's all linked. Cool beans, Mara. Thank you for that. Macy's. Did we already look at Macy's? I think so. Check Boeing. Boeing was a no. We checked that last night. Okay, so UPS is a no. Next on the list is RBA. I don't know who came up with RBA. What is RBA? RB Global. I heard someone say we actually manage a soft landing. It will be the first time ever. Okay, REVG. Charles Schwab Card works globally. Cool. I'll have to remember that one. REVG. Never heard of it. AMS. AMS. All right, so we're looking at RBA. That's a no because it is a monthly. No idea about historic soft landings myself. Well, we'll see. Maxar. Someone came up with Maxar. MAXAR. Maxar Technologies. Can't find a signal. That's a no. CVX. Chevron. CVX. Chevron. 161. 162. Okay. Chevron's going to be a no. 160, 159. The 162 is going for 86 cents. No. CAG's Conagra. 31. No. Conagra's going to be a no. CAG's a no. Oh. 31.52. 31.50 is going for 10 cents. No. Sorry. CVX was no. WAG. 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 I don't know. WAG. Walgreen Co. It has no options. Option WAG. How long did it take to be profitable option trader? I taught this strategy to my 9-year-old daughter. She averaged 5% per month when she was 9. You said before the nephew started his with 50 bucks. That's right. Can you explain how? It just seems you. Well, I do it for my grandson. Need more than this. Okay. Hold that thought for a second. TRN. Altria. Okay, Altria is at 42. The 42 is going for 27 cents. All right. You ready for this one? What was his name? All right, Sticks, are you ready? Are you paying attention? Seriously? Okay. Marketplace. Okay. All right, you ready? You ready for this, Sticks? Altria, MO. The EX date is the 22nd. Okay? See that? EX date, the 22nd. The dividend, 98 cents. Okay, remember that. The 22nd is the dividend. I mean, it's dividend date. The dividend itself is 98 cents. Okay, so I want to buy the stock 2 weeks before the EX date. The EX date's here. I want to buy it on the 8th. All right? The 8th of March 24. Okay, March 24. No, there is no March 24. What? Oh, March 8th, sorry. March 8th. All right, so here's March 8th right here. See it? See the chart? March 8th. Okay, this is what you're looking at, the chart. Going sideways, dump down, and it moves up. March 8th. See, look over here. Opening price, the high of the day, low of the day, the close of the day, the volume. Okay, that's all the numbers you need to know right there. The date, 3/8/24. See that? 3/8/24. March 24, the 22nd. The dividend, 98 cents. March 8, opening price of the day is 41.55. Clear. 41.55. See it? 41.55. Okay, see the calculator? The dividend is 98 cents. So I'm going to add. Yeah, I get that. I'm proving a point here for a second. Hold on. Adding the 98-cent dividend right there. 98 cents. Okay, I'm going to add that to the opening price of the 8th. Okay, plus 0.98. That gives me 42. See the price? 42.53. Okay, 42.53. Now, if you buy the stock on the date 10 days prior to the EX date, EX date 22nd, 10 days prior to the 8th, at the opening of the day. Okay, the opening of the day, whoops. Okay, it's this number right here, see? Date, right there. Opening, high, low, close, blah, blah, blah. Okay, so here's the 8th right here. Okay? Now, the opening price of the day, 41.55. Okay? 41.55, right? Add the 98 cents to that. Now I have an exit target of 42.53. 42.53. How many days does it take me to get 42.53? Because that's my target. The opening price 10 days prior to, add the dividend, 98 cents. I have an exit target of 42.53. Okay, so the high of the first, of the 8th, was only 42.05. Okay, the next day, oops, where did I go? The 8th. Okay, that's the 11th. All right, the 8th was a Friday, right? Monday, she opened up at 41.98. The high of the day was 42.74. What was my target? 42.53. So how many days did I hold on to it? 2 days. I bought it on Friday. The opening price, okay, 41.55. I add the dividend in it, 98 cents. I'm out on Monday. 2 days. Okay, so if my grandson started out with 50 bucks, how many shares can he buy? He can buy 1 share. 1 share at 41.55 is 1. Okay, he sell it. He adds the dividend to it. That's 98 cents. Okay, now 2 days later, he's out with his profit. So how much was his profit? 98 cents. Not a huge profit, but it's more than he had before. Okay, and then you go on to the next stock, do the exact same thing. You look at where the dividend date is. Okay, you buy it 10 days prior to the EX date. In this instance, it's the 8th. Now, these are all the companies I can buy. Okay, this date right here, look, I got all these companies to look at. Okay, this date here, oh, I got all these companies to look at. I got all these companies to look at. All these companies to look at. All these companies to look at. Hundreds upon hundreds upon hundreds of companies every single day. You buy it 10 days before the EX date. That's what you have the calendar for. 10 days before, you buy it. You add the dividend into it. That's your sell price. And you just leave it good till canceled till it's filled. Great job, done 90 minutes. Okay, blah, blah, blah. Okay, let's go back and see what questions I missed. Which book of yours recommend first? Probably the first one. How much money do you recommend to start with? Kill them. That's totally up to you. Okay, now sticks. Does that make sense? Well, I learned this in book number 1. I think it's book number 2 for that strategy right there. Okay. So it doesn't really matter what you start out with. It's your consistency. Okay, so whether you like it or not, in 10 years, you're going to be 10 years older. Is that calendar on to you? Yeah, that calendar is on Thinkorswim. Yeah. Okay. Could you break down SMCI? I never even heard of SMCI. SMCI. Okay, no dividends in March, no dividends in February, no dividends in January, no dividends at all. SMCI is a no. Sorry, dude. Okay, I only do dividend stocks because if the stock goes down, at least I get the consolation prize of collecting dividends. So you buy 10 days before the EX date, add the dividend, expected dividend, and that's the sell price. That's correct. PXD, never heard of PXD. PXD. PXD, the 1st of March. Okay, we're not going to look at that for another 8 or 10 weeks. Sorry, dude. Okay, next one on the list, Altria. That was no, because that was a couple weeks ago. Now, somebody mentioned something about JP Morgan. JPM, the 4th of April. Okay, that was last week. Now, we looked at JPM. Night all, good night. STLA and MUR. STLA, never heard of it. STLA MUR. What is a dividend? Oh, Pulp Fiction. You're not new. You were here before. Stellantis. All right. Caldwell Cutie. You got to give me its ticker symbol. I don't know the ticker symbol for Stellantis. And if I don't know it, usually it doesn't mean anything. Murphy's Oil, same thing. I need a ticker symbol. Okay, so JP Morgan's a no. It was last week. Okay, so no sense us looking at it. STLA, still never heard of it. STLA. Oh, look at that. They got the dividend coming up. Okay, well, I got it right here. See, the dividend's right there. Okay, STLA, $1.66. STLA. No, it's a monthly. No. I'm in the Caribbean, but how do I learn about trading? Well, okay, so Caldwell Cutie. STLA is a no because it's a monthly optional stock and it just doesn't pay. It's not an annual. No, it's annual. No, it's monthly. See? April, May, June, August, September, January. Monthly, it's not weekly. I only do weekly options because monthlies just don't pay. It's just not worth it. STA is no. MUR. MUR. No. Okay, MUR monthly. Not worth it. The numbers just don't work. Glaxo. Ooh. I don't know the ticker symbol for that. PBI device on long-term investment. PBR. PBR. Petro. We did this one before. Interesting. 15. 16. Interesting. Wait a minute. Did PBR pay dividends? Is ODFL a dividend company? Old Dominion Freight. ODFL. ODFL. All right, let's look at PBR. I don't think PBR pays dividends, does it? I think we did this one once already. Is it PBR, right? Okay, PBR. Oh, it does have dividends. Yeah, I remember this one. The dividends are all over the place. No stability. And they've only been paying. All right. Would you just buy the stock outright for the dividend on STLA? STLA? No. No, not at all. PBR is different than, right? PBRA is different than PBR. Really? PBRA. Yeah, that's not coming up. Okay, yeah, see, I put PBRA in there and it's not coming up. Sorry. Do you sell calls out of the money when you're buying stocks 10 days before the X date? All right, user 4460. It's all about the numbers. I'll take a look at the numbers and see why. All right, Caldwell Cutie. Why? All right, let me explain it to you. STLA. Let's go back here. STLA. Okay. Okay, so the dividend is $1.66, right? All right, see, 166. It's a great dividend, okay, on $26 stock. That's an awesome dividend, okay? Here's the reason why I won't buy it. Here we go. At this moment in time, if I buy it at $27.14, okay, the 27s are going for 45 cents, right? Right? 45 cents. That's over 1%. Let's take a look at the numbers. Okay, pull up my calculator. Okay, the 27s are going for 45 cents, but I'm losing 14 cents right at the top. See that? If I buy it at 27.14, I sell the 27s, I'm getting 45 cents. Okay, take 14 cents off of that, I'm only getting 31. All right, so I'm collecting 31 cents. Okay, fine. 31 cents is still over 1%, correct? 31 cents and I divide it by the purchase price of 27, and that comes to a grand total of 1.1%. Okay, how many dividend stocks do you hold? We'll get to that question in a minute. Right now, we're going to answer the question for Caldwell Cutie. All right, so my return for investment is 1.1%, all right, for the week. Now, I remember, I invest by weekly cash flow. The dividend is 3 weeks away, all right? Now, right now, we are on the 8th, all right? We are on the 8th, which is right here, okay? 8th to the 12th, that's 1 week. There is 2 weeks, okay? So I'm getting 1.1% for 2 weeks because the option, for the monthly option expires on the 19th. So I'm getting 1.1% for 2 weeks. Okay, so I got to take 1.1% and divide it by 2. That's 0.5% for the week. So why would I do 0.5? Why would I buy a stock to do 0.5% per week when I have so many other stocks that pay over 1% per week? That's why I don't do monthlies. The numbers just don't work. I'm getting less than 1% per week on monthly optionable stocks. That's why I don't do them. And if you like that, fine, you do it. You asked my opinion. I said no. And the reason why I'm saying no is because it doesn't pay 1% per week. It just doesn't. I had Cliff. My screen is backwards. Very observant of you. It is backwards. There's a reason why it's backwards. Okay. This screen here is being live broadcast on YouTube. So you can't even see these numbers anyway. So if I point these numbers out to you, let's go over here. Okay. If I say, look at this number right here, you can't see it on your phone or your iPad or whatever instrument you're using. Okay. You can't see that. But what you can see this is the low of the chart and this is the high of the chart. You can see that. But you can't see these numbers and you can't see these dates. All right, but you can see them on your computer if you have this screen, which is being live broadcast at this moment in time on YouTube. Okay, go up to the bio, right up there. Click on my pretty little face, and that'll bring you to that 10-minute trade. And all the links are right on there. Okay, Caldwell Cutie, I hope that answered that question. I don't do monthlies because they just don't pay. Next question. Do you sell puts? No, I do not sell puts. How many dividend stocks do you hold? I look at 150 different stocks. Can you take a look at DJT? No. And tell me what you would do if you bought the stock at $52 a share. Okay. What would I do if I bought DJT at $52 a share? Well, first question I'd ask myself is, why the hell did I buy it in the first place? And that would give the answer to your question. I thought that was funny. Soon, nope. Caldwell Cutie, what about just buying the stock for the dividend? There's absolutely nothing wrong. Okay, Caldwell Cutie, you want to buy that stock and just collect a dividend? Go ahead. I'm not telling you what to do. I don't tell anybody what to do. You asked my opinion. I gave you my opinion. I'm terribly sorry you don't like my opinion. Okay, I buy for a safe, secure, predictable, consistent 1% per week. Okay, monthly optionable stocks do not give me 1% per week because the dividend is paying after the option expires, which means I'd have to hold on to that stock for another 4 weeks. Okay, so let's go back again. Where was it? Okay, see, the monthly option. A monthly option expires the third Friday. 1, 2, 3. The dividend is the following Monday. Okay? So, I would buy it, not DJT, what are we looking at? STLR, what the hell was it? STLA. STLA. Okay, so if I buy it, right, and I collect the dividend, great, fine. The next option available is the 17th of May. Okay, 17th of May, okay, for me to get rid of it at a profit or to do anything with options. Or if I collect a dividend and then sell it for, you just do dividend capture. Dividend capturing is where you buy it before the dividend date, collect a dividend, and then sell it for profit. When is it gonna go up? Stocks usually go down after they pay the dividend. Okay, and there's no predictability to it. And if I had to do options, the next option is right here on the 17th of May, which you see the number right there in parentheses, 39 days. I'd have to wait 39 days. 39 days, that's 6 weeks. What is that option at 6 weeks? At 27, if I bought it now, that's 55 cents. That's not even 2%. For 5 or 6 weeks? Yeah, no. That's why I don't do monthly optional stuff. I don't care what the dividend is. Really, I honestly don't. The dividend I will collect as a consolation prize if they continuously increase it year after year after year. But they have to have weekly options for it to work for me. That's for me. Okay, you guys can do whatever you want. And just, while I'm on that subject, okay, there are 12 imposters pretending to be me. Okay, so when I say if you want to talk to me and you want to be reassured, DM me with your phone number and I will give you a call. Okay, because you will get text messages, you will get DMs, and you will get opportunities from people pretending to be me. That's why I tell people, you want to be sure it's me? So give me a phone number, I'll call you. What's the YouTube? The 10-Minute Trader. The 10-Minute Trader. It's right in the DM, right up here. Okay, the10minutetrader.com. Okay, you can look up Dividend Stock Talk. It'll take you all the links that I have. I've been online for over 10 years. Actually, over 20 years, I think. What year is it? Yeah, I've been online since the 90s. I remember dial-up modems. I remember we had to pay by the minute. All right, back here. Okay, so Caldwell Cutie, I hope that answers the question. I don't go just after the dividend, because although the dividend, in this case, is attractive, okay, there's no long-term play. Rule number one, never buy something you don't want to hold long-term. I don't want to hold this company long-term. Number one, I've never heard of it. Number two, it doesn't fit my parameters. Number three, it doesn't have weekly options. And how do I know if they've increased their dividends for 20 years or more? I don't know. So rule number one, never buy something you're not comfortable holding long term. I don't hold. STLA is. So that's a no for me. I'm sorry you don't like my answer. All right. If I have 1 share or 20 shares, does the dividend change? Nope. New guy, if you have 1 share, you collect 1 dividend. If you collect 50 shares, you collect 50 dividends. Okay, the dividend doesn't change. It's dividend per share. So STLA, the one she was giving us the explanation for, is paying $1.66 per share. So 1 share, you get $1.66. 2 shares, it's, what is it? $3.32, something like that. So on and so forth. Corey Chitria, can you take a look at DJT? Yeah, no. Okay, Corey, you have to ask yourself that question. Why did you buy DJT in the first place? Okay, what was your exit strategy? Where did you think it was going to go? What was your thought process? Okay, you bought it. Why did you buy it? Where did you think it was going? What was your exit strategy before you bought it? All right, you're entertaining Al here. That's funny. GSK, never heard of it. Caldwell Cutie, it's a new company and the largest EV manufacturer out in the market with contracts with WG. Okay, Caldwell Cutie, that's awesome. Awesome, really is. I tell you what, that sounds good for somebody like you. However, somebody like me, I am 60. I do want to wait for something to do something. I don't, honestly don't. I don't care if you guarantee me it would double, triple, quadruple in the next 5 or 10 years. Don't really care. Okay, if it doesn't give me a safe, secure, predictable, consistent 1% per week, Don't really care. There are too many other stocks that will give me what I want. Kroger, KR. But you can sell monthly calls a week before expiration. That's correct. That would be like a weekly option. Yes, you can. Kroger, KR. KR. I don't think Amazon pays dividends. VTI. VTI. Mara. Didn't we take a look at Mara once? And that was a no. M-A-R-A. Jacob. I bought ET as a longer term play. Definitely willing to hold. Just wondering your thoughts. All right, let's take a look. Take a look at ET. People keep taking a look at Energy Transfer. I don't know why. ET 15 to 16. Yeah, that's going to be a no. It's going to be a no for two reasons. For me, Qualcomm. Okay, draft client will say yes, but not out the money. We are waiting for a month. Blah blah blah. Will M. What do you think about SPY credit spreads? Interesting, but not for this trading strategy. Okay, you guys are throwing out stuff. I'm not going to get to them because it's 10 past 11, and I got a big list. I got a big list to go through. Okay, so ask questions. Don't throw out any more stocks. MDLZ is a good one. It's not on the list, but anyway. All right, so the reason why ET is no. Here's a couple of reasons. A couple. Look at where it is. Okay. Beginning of February. Okay, beginning of February to here. Where do you think it's going to go? Seriously, where do you think it's going to go? Could it keep going up? Yeah, it can. But do you think there's profit to be taken there? Look at it. 2 months ago, it was there. Now it's here. Look at all this profit right here. If you bought here, 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 and you don't take this profit, it's not a profit until you take it. Number one, nobody ever went broke going profits. When can I see the list of 150 stocks you buy? Well, you could join the morning trading group, and every week you'd get a list of stocks we're looking at for the week. That's the only way you get the list. Look at it. Other than that, you can create your own list. I've been doing this for over 20 years. I'm a nice guy, but I'm not that nice. I do have to draw the line somewhere. Okay, so ETs, no. Two reasons. One, look at the chart. Second reason, 1585. The 16s are going for 4 cents. Really? 1585. The closest one is going to be the 16. 4 cents. That's no. Okay, next one on the list. JP Morgan, we looked at CVS, GME. Really? GME? Goldman Sachs ETF. No. Okay, no, it's a monthly. Okay, as I went over earlier, I don't do monthlies. Do I day trade? No, I do not. I created my own list, but definitely spent more than Patreon fee in time. Thanks, Al. It all depends on how you value your time. Okay, so I've been doing the same stocks for the past 20 years. AbbVie, yeah, John, AbbVie is on the list. So what do you try to shoot for? I try to shoot for 1% per week. Do you long-term invest? Yeah, the longest I've ever held on to anything is 9 months. As a percent, 1% per month. 1% per week. Sorry about that, Jacob. My goal is a safe, secure, predictable, consistent 1% per week. That's it. All right. Now, if you do it right. Okay, remember, for those that are new here, this trading strategy that I'm showing you right now, okay, this trading strategy was created for my 9-year-old daughter. 9 years old. She was 9 years old. Okay? It had to be simple. Number one, it had to be simple. She was 9 years old. It's not the brightest bulb on the tree. I love her to death. Not the brightest bulb on the tree. It had to be simple. It had to be safe. The income had to be predictable, consistent, and no way she could lose. What do I mean by that? Well, to get that 5 criteria, why no way she can lose? Well, here's the thing. What happens if a 9-year-old loses? She's going to cry. I'm going to feel like crap. And then I'm going to hear it from the wife. And I hear like crap twice. All right? Yeah, so those guys are married who have little kids. 9-year-old little girls cry. You feel like crap. And then your wife makes you feel even worse. So, yeah. So, simple, safe, predictable, consistent, and no way to lose. Okay, so that being said, I came up with 5 rules. And they're simple rules. They really, honestly, are simple rules. Never buy anything you do not want to hold long term. Never sell at a loss. Must have 20 years or more of increased dividends to the shareholders. Must have weekly options. And then all the numbers have got to work. Okay, that's why I say, if I buy it at this and I sell it at that, it's got to equal 1%. Where do I join Morning Trading Group? Truth the System. All right, come up here. Okay, see my face right there in the top left corner? Okay, that's the bio. You click on that. That will bring you to the my bio, and that will bring you to a little tiny website, the10minutetrader.com. The10minutetrader.com. This link right here, the Trading Live Online, right there. Trading Live Online. A little bit below that, YouTube channel, Twitter, Facebook, Instagram, podcast. 4 years of details on podcast, LinkedIn, Patreon, TikTok, live on YouTube. Books by James. Look at this. James has written 13 books. I'm on book number 14. All right, all that being said, let's take a look at what's next. All right, what's next on the list? What's next? Okay, GAM was no. Apple. Now, Apple is not on my list. It is and it isn't. Let me explain. I do have positions in Apple, but it's for a different trading strategy, not this one here I'm teaching. The only reason Apple's on my list is because it's on Warren Buffett's list. All right, Jim, I already have too many to look at, okay, that were here before you. Okay, I'm not picking on you for any reason whatsoever. I enjoy the interaction. I really do, and I appreciate it. However, I have this many to look at, and I'm done at 11:30, okay? Draft, night, James, see you in the morning. Draft, see you in the morning. Okay. Jim, thanks for following. I'm here every night, 9 to 11:30. That's 2.5 hours. Okay, so you want me to take a look at PTN? Come back tomorrow night. I'll take a look at it with you. Okay. Next one on the list, because people are here before you, and it's only fair. Now, as I was saying, Apple's not on my list. It's on Warren Buffett's list. So I'm sure we can all agree that Warren Buffett has some kind of precedence that I don't. Is this a long buy? No, I don't buy anything long term. But let's take a look at Apple anyway. AAPL. Oops. AAPL. 168. Okay. Anyway, what did you enter today? Tyler, I entered a bunch of stocks today. All right. But Apple is going to be a no for this week. 168.27. 167 is going for 225. But I'm losing 75 cents. Pretty close to 75 cents. If you take 75 cents off of that, that's not 1% anymore. Doesn't really work. Ally, A-L-L-Y, another company that is on Warren Buffett's list. 38.57, 39s, yeah, not quite there. Okay, see what I mean by not quite there? 39.60, okay? 39.50s are going for 15 cents. Just doesn't work, okay? I like that 1% per week. And it goes strictly by the numbers. Okay, I only look at 150 stocks. Now, when you're looking at this, and I keep saying no, 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 okay, these are the lists you guys give me, okay? This is the list you guys gave me Sunday. This was Monday, and this was last night. Wait a minute. This is tonight. I weren't here last night. I had to go to the hospital with the wife last night. But, these are all the stuff you're giving me. This isn't this, what you're seeing, the no, 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 no. That's not my list. My list is, right here, circled inside. What stock are you buying? Well, I'm not buying anything. I already bought everything. I buy everything on Monday morning. I buy all my positions Monday morning. Tuesday, Wednesday, Thursday, I just look at it and see what it's doing. Okay, don't do any trading Tuesday, Wednesday, Thursday. I just see what it's doing. Okay, Friday, I take a look and find out what do I do next. This man needs to take a break and touch glass. Okay, grass. Oh, grass. Yeah. Actually, I was outside today. But I appreciate that. Thank you, Lightest Skin. Interesting name. All right, so next on the list, General Electric. General Electric's usually a no. They've been in business over 100 years. The premiums aren't really that great. GE Aerospace, 157.10. Okay, so can you give us a sample of one stock you bought and run us through what happens? Okay, let's look at Walgreens. WBA. Okay, Walgreens. All right, you right? We all know who Walgreens is. They've been in business for over 100 years, right? They increased their dividends for years. Every major city has a Walgreens. Okay. Okay. In the older generation, got to get that prescription drug somewhere. What are your choices? You got Walgreens, CVS, Walmart. What else? All right. Anyway, let's take a look at the numbers. This is what it was a year ago. Here is where it is now. Okay. All right. So let's take a look at the chart. A year ago, we opened up at 36.04. So isn't long buy safe than short buy? Dennis, it really depends on your goal. My goal, okay, if your goal is long-term plays, hey, that's great. More power to you. My goal is safe, secure, predictable, consistent 1% per week. I'm showing you how I get a 1% per week in this example right here. Somebody asked to show you an example. I'm going to show you one. Okay, Walgreens. Rule number one, never buy something you don't want to own long-term. Never sell at a loss. I have no problem holding on to Walgreens. I like Walgreens. I'm pretty sure we're all, safe to say we all heard of Walgreens. All right. A year ago, 36.04. The high of the year, 36.58. That was almost a year ago. Okay, 36.58, almost a year ago. She drops down, and the end of November, she's at 1980. Okay, right here, this big drop, 1980. She bounces back to hit a nice number at the end of the year. Okay, 1980, then she bounces back, ends up the year, 2023, at 27.03. The last 90 days, 90 days ago today, the last 3 months, 3 months ago, okay, 3 months ago. That would be January 8th. January 8th, 90 days ago. Right here, it was the high, and then she just drops, goes sideways, drops again, goes sideways again, and drops again. Okay, so well, let's take a look. Now, 90 days ago, the high was 25.87. Okay, Silva, how you doing? We dropped down to 22, go sideways for a couple of weeks, drop down again to 20, go sideways for a couple of weeks. Let's look at the. Let's take a look at the last 30 days. That would be March 8th. March 8th, right? There we go. 30 days ago today. Tyler, can you talk us through last week's forward play? All right, Tyler, we'll take a look at it in a second. Let's take a look at this one, okay? Take a look at this one. 30 days ago, opened up at 21.01, okay? 21.01. She went up a couple of days, pulled back, okay? Up a little bit, pulled back. Then we have our 30-day high on the 28th, right there. Okay, 30-day high on the 28th. That was 22.05. 3 days later, we're at the 30-day bottom. Now, this was last Wednesday. Right there, last Wednesday. The 30-day bottom. Okay, so 30-day top, 30-day bottom. 2 up days in a row. Thursday and Friday. Thursday and Friday. Which would give me a buy signal for Monday. Okay? Now, she opened up this morning at 19.20. The premiums were fat this morning, but not so much at this moment in time. However, at this moment in time, Monday night, this is what it looks like. The last trade, 19.16. Tomorrow, the bid is 19.11. The ask is 19.19. So if I want to buy it tomorrow morning, I'm paying 19.19. What is the closest strike price? 19. What is it going for? 38 cents. So if I'm collecting 38 cents to sell it at $19, I'm losing 19 cents right off the top. Okay? Because I'm buying it at 19.19. I take that 19 cents off of that. I subtract it off of my profit, 38, so I'm making a 19-cent profit. All right, so let's do a little bit of math. Clear that. And if I'm only making 19 cents for the premium, okay, and I divide it by the purchase price, which is $19, that gives me a grand total of 1%. So here's the question. Do I like Walgreens? Well, I personally do. I bought it back in early February, and I carried it for 12 weeks. Okay, I made a nice fat amount of money off of Walgreens this year. I bought it, it dropped. I bought it, it dropped. It kept dropping. I dollar cost averaged twice, but I sold premiums every single week. Okay, I collected the dividend once. Okay, I collected 1 dividend, and I collected, I think, 12 premiums. Yeah, thanks, Al. 1% for 4 days. Okay, so if I buy it tomorrow morning and I sell it the 19th, I can get 1% for 4 days. That's the strategy. But you have to go back to rule number 1 and rule number 2. That is, hey, Mikey G. Rule number 1 is don't buy something unless you plan on owning it for a long period of time. You need to ask yourself the question before you buy Walgreens. If you want to buy Walgreens, do I like Walgreens? Okay, do I mind owning it? Okay, that's the question. And then rule number 2, never sell for a loss. Okay? Okay, pumpkin? All right, let's take a look at Ford for somebody who wanted me to explain Ford. I don't know why Ford is not a good trade at this moment in time. Thank you, much appreciated. You got that? All right. Ford, here we go. La, 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 la. A year ago, Ford was opened up at 12.12. It had a triple high at 15.24. It had a double bottom at 9.63. Okay, that was back in November. Last 90 days. Never sell for a loss, even if it goes to 0. Now, that's not a very interesting question. Okay? If you think it's going to go to 0, don't buy it. If you don't like Walgreens, don't buy it. We're looking at Ford right now. If you don't like Ford, don't buy it. It's that simple. 90 days ago today, Ford was at 11.85. The 90-day bottom was on the 19th, 10.83. The high was last Thursday at 13.95. Winemaker, how you doing? Okay, so last Thursday was the high. So that basically means there's way too much profit right here in this area for me to even think about it. Last 30 days. $30 days ago today, it opened up at 12.43. Bottomed out on the 18th of March. From there, nice run up to the high. Pulled back on Friday, up again today. So buy low, sell high. Yeah, kinda. Okay, it all depends on what the chart looks like. Okay, 30 days ago, 30-day bottom, 30-day high. This is where it is. That doesn't look very favorable, in my humble opinion. Okay, Now, 13.45, the 13.50s are going for 14 cents. That's over 1%. But here's the thing. Do you like Ford at 13.45? Okay, I like Ford. I would buy it at 13.45, sell the 13.50s at 14 cents. That's over 1%. Dennis says no. Okay, Dennis, Ford has been in business for over 100 years. The book value is $14.78, I believe. Okay, the book value is higher than the current stock price. And if I bought it at the current stock price, $13.45, and sold the 13.50s, I'm getting 1%. Winemaker, I love Ford too. Okay, it is 11:30. Y'all know what that means. That means it's time to say good night. 1% of what amount you buy? All right, Jordan, if you buy 100 shares, okay, let's say, hypothetically, that's a good question. 100 shares, clear. Okay, right now it's at $13.45, $13.45. Multiplied by 100 shares equals 1,345. 1% of that is 13 bucks. Sorry, that's all it is. Okay, so let's clear that and let's buy 1,000 shares. 13.45, and multiply that by 1,000. Okay, and that comes to a grand total of 13,400. Okay, 1% of that is 134. 1% is 1%. But, yeah, 1% per week comes to over 50% per year. I'm sorry that you have to do a little bit of work. Okay, it takes me 15, see, I've been doing it for a while. It takes me less than 10 or 15 minutes to do this every day. Okay, now I make 1%. It comes out very nicely for me. But it was created for a 9-year-old little girl. The criteria had to be simple. It had to be safe, predictable, consistent, and no way she could lose. And if you follow the rules, there is no way you can lose. Okay, rule number 1, never buy something you do not want to hold for a long period of time. You don't like Ford? You don't want to hold for a long period of time? Don't buy it. Okay, right now it's at $13.41. Okay, buy it at $13.41. Sell somebody rights to buy it from either 13 or the 13.50s. Okay, the 13s, you'd actually be making nothing. Wouldn't be worth doing the 13s. Because right now, $13.45. If you sold the 13s, you get a 46-cent premium. And you take the 45 cents off the 46, you get 1 penny. It ain't worth it. The 13.50s is paying 14 cents a share. You're only 5 cents off, and you're getting over 1%. Okay, fine. So, rule number 1, never buy something unless you're okay with owning it long term. Rule number 2, don't sell at a loss. Rule number 3, make sure it has the 20 years increased dividends. 4, weekly options. Why? Well, because I want weekly income. Now, I have 150 different stocks I take a look at on a weekly basis, not a weekly basis, on a quarterly basis. Okay, see, look at them all. Okay, that's a lot to look at. But every week, there's about between 5 and 20 stocks to look at. I don't buy 5 to 20 stocks. I look at 5 to 20. Okay, and I only pick 1 or 2. I think this week I've only picked up 2 stocks this week because I brought some over from last week. Okay, that being said, it's past 11:30. You guys have a great night, and we'll catch you again tomorrow. Okay, for those of you really interested in chatting with me, DM me with your phone number, and I will give you a call. We'll chat about it. See if it's right for you. You never know. Have a great night. You guys over on Instagram. Bye. You guys over on YouTube. Bye. And you guys here on TikTok. Bye.